Good morning, everyone. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, daily chart, and we talked about being able to engage the upper band yesterday. They've been able to do that. They did it yesterday. They've done it in Globex again today. We traded as high as 34.60. So you have your upper band ride out of this compression area if the bulls can hold it. I want to go right to the hourly chart. Support at the hourly midband. Support at the hourly midband yesterday about 11 o'clock. Support at the hourly midband pre-market yesterday. That was hourly midband and the monthly pivot. So you can see what it's done here. Support, support. So choppy little morning yesterday. It's still very news-driven, incredibly news-driven. And the whips are news-driven and the moves are news-driven. So it was a fairly steady move up in the Globex overnight, which ended up being a nice long. Unfortunately, in dealing with the news whip during the course of the day, it's hard to avoid some bumps and bruises along the way there. It's just it is what it is. So as we head into Friday, if the hourly midband can hold it, they can get above 34.60. Friday happy fun time is certainly you certainly have some potential. That's when it's Friday afternoon, and who wants to be short over the weekend? Well, I don't. Do you? Nope. Nobody does, and you just see the big kind of lift. On the flip side of the coin, if the news gets negative for whatever reason, and it stays negative, then nobody's going to want to be long over the weekend in this kind of environment with this kind of headline risk, coming at you in multiple directions, and you might see a little bit of give back. I am not envisioning any kind of significant move by the bears unless they can convert that hourly midband to resistance and then break some other level that matters, whether that's daily pivot today, 34.32, 34.33 area, something of that nature. They keep doing these violent whip downs, and these violent whip downs are insta-bought, and they're head fakes. Now, one day, maybe today, maybe some other day, there'll be a head fake down that's not a head fake down, and it'll give you a little bit more of a significant move. The only time we've seen that was the Trump tweet on Tuesday, but that was bought, and you see where that went after that. So for me, you gotta respect risk. You gotta stay flexible. You gotta understand that it's an absolute advantage bulls tape. It's a dip by tape. And if you're, for example, we were long 27.75 yesterday, and at one point before the close, we were trading up, up around 10 handles above there, and they instantly whipped it down into 30. Not enough to take us out of our trade, but enough to print a big red candle on a 5-minute chart. You've got to wait and see if that particular candle wants to be something more. The ones they're squeezing in this situation are the ones that are diving at those candles because they want to be short in their guts, in their soul, in their whatever they read in Barron's. Say you fill in the blank. You have to avoid that. You have to avoid that and understand that these whip downs are getting bought. Eventually there'll be one that isn't bought, but when that one comes, there'll be plenty of time to get in. So don't get out of stuff that's working for stuff that might work. All right, that's been a rule I've followed for years. Don't get out of stuff that's working for stuff that might work. Because on balance, over time, you'll be better off. All right, everybody have a great day. Have a great weekend. Be safe, be healthy, take care. Trade them well. Talk to you Monday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.